So I'm going to talk through three really simple strategies that you can implement like this week to increase the sellable value of your business. Even if your goal isn't necessarily to sell your business right this second, keeping an eye on the transferable value that your business holds is a good idea because a business that is increasingly valuable is also increasingly satisfying to run as a general rule. And at some point, all of us are going to have to exit our business in some way, shape, or form. And your exit, even if you want to, hand the business off to an employee or to a kid, a business that is as valuable as possible is infinitely easier to transfer, even if your goal is not to maximize the value that you extract from the transfer. So for all of us, it's a smart thing to be thinking about increasing the value in our business. So I'm going to share three simple, easy to execute strategies that can help you increase that value. Now, these don't necessarily apply to every single business in the world, but there's a high probability that if you think creatively, you'll be able to figure out some ways that these strategies can be beneficial to you. So the first strategy we're going to talk about is add recurring revenue. Now, some businesses do this just by nature of the business model. So like, let's say, for example, that you are a financial advisor and the way that you get paid is you get a fee that's a percentage of the assets that you manage. So once you get the account, you also get some recurring revenue with it. Some businesses are like that. Other businesses, however, are very transactional. So sometimes whenever I've talked with business owners who have very transactional business models, they will tell me, well, this isn't really a good option for me because the business that I'm in just isn't one where you have recurring revenue. But one of the little tricks that I think that anybody who has a transactional business can consider is to make a recurring revenue product that sits alongside the core offering that your business is built around, and then try to think about getting your most valuable clients to also become clients of that recurring revenue product that you created. And I'll give you a practical example from a real life business that I worked with before. There was a company that I did consulting work with who their product, so to speak, their service was they refinished concrete floors inside of production manufacturing facilities. So, like if think about like a concrete floor that has machinery in it and the machinery drips oil. Eventually that oil, becomes potentially like a slip hazard and you have to get rid of it. Well, how do you do it? You got to grind it out of there and then resurface the concrete. So that's the kind of stuff they would do. Very transactional. You don't need somebody to come in and grind down your concrete, every quarter or something like that. So this was an issue that this business had, no recurring revenue. So what did we do? We made a program for these large manufacturing and production facilities where we could send in an associate on an annual basis and do a safety check that also helped them check some OSHA boxes, where we helped them look at the quality of their concrete surfaces and assess whether or not there were any trip hazards, slip hazards, anything of that nature. Gave them a nice report. It was something they could give to the safety manager at their plant, so it was helpful for compliance purposes, and we collected a small fee. Now, you might be thinking, well, that's all well and good, but I mean, that's not very much money. Like, that sounds like that might not be worth the trouble. And that could be the case. You definitely need to make sure if you create a line of revenue like this, that you think through your pricing mechanism and you make sure that it's worth your effort. But think about this. If you've got, let's say you have, in the last 5 years, you've done business with 100 customers, and you have a transactional business. And of those 100 customers, there were 15 of them that did business with you at least 3 times. Or when you think about the future, there's the potential that they could do business with you again in the future. Well, maybe those folks could be the ones that you target for your recurring revenue product, and you can try to come up with something a la this, concrete safety inspection product get those clients to pay you. And then if you were in a situation where you were selling the business, part of what you could say is, well, yeah, my revenue is transactional, but I also have this recurring revenue product. Clients sign up for it. It's an annual sort of a thing. And my 15 largest clients are all members of that product. And just so you know, in the last 5 years, those 15 clients represented 60% of my revenue. Now, all of a sudden, you go from being a business that has maybe 0% recurring revenue and 100% transactional revenue to maybe you can make the case that it's 60% recurring revenue, because that revenue that was generated from those clients, those are recurring revenue clients that you have long-term engagements with. So that's the idea. Number one, add a recurring revenue product, or if your business allows for it, just add recurring revenue in the first place. The second thing, which is kind of sort of related to this, is use, and I'm going to say use instead of get a CRM, but use your CRM. So if you don't have one, get one. And if you do have one, but you're not making very judicious use of it, use it. So this relates to the recurring revenue story. And here's why. If I were, let's say that I was looking to buy a gas station. I was going to buy a gas station. And I said, okay, well, what are your assets? Oh, well, we're on a good street corner. Now, our facility's nice and clean. It doesn't have any mechanical problems. We've got good relationships with our vendors that we get our food from in our convenience store. We've got a good contract with our gas supplier. Those are the assets that we have. Okay. Well, how do you communicate with your clients? Oh, well, we have a sign on the corner. Sometimes maybe we put an ad in the newspaper. All right, great. And that's not terrible, but same scenario. Let's just say that that's opportunity number one for me to purchase a business. But then I find out about opportunity number two, which is another gas station. Maybe even it's diagonally across that intersection from that first gas station. And I talk to that owner and I say, okay, well, what are your assets? And they say, okay, we've got nice, clean facility, good relationship with our vendors, so on and so forth. But, also we have 2,300 customers who we have their email addresses. And we have 800 customers and we have their cell phone numbers. And so we send out a text alert, and we do that anytime we have a special in the convenience store, or if sometimes we run promotions on gas prices, or we do things where if you fill up your tank, you get a 6-pack of soda, whatever. And we send notifications out about that by text and by email. That is a much different scenario than the first gas station that has no tangible connection to their customers, other than the fact that they're just at a location that their customers tend to go by. So you go from being kind of at the mercy of your customers to having a little bit more of a proactive opportunity to reach out to your customers. So the best case scenario is you have a CRM that's full of contacts, and you are communicating with them, and there's evidence that they respond to the communication. Like, for example, if you can show that when you send out emails, you get a pretty good open rate on those emails. But even in that, even if you don't have those boxes checked, even if you just had some evidence that you've got an audience that you've built, that's better than none. So that's the second tip, is to use your CRM. If you don't have one, get it. And if you do have one, but you're not making judicious use of it, use it. And the goal there is have a big audience that you communicate with regularly, and you can see evidence that they are responding to your communication. They're opening your emails, they're liking your social media posts, something along those lines. So number one, add recurring revenue. Number two, use your CRM. And the number three thing that you can do to improve the value of your business, clean up your books. I'm going to give you another example of a story here. This is another one where I was working with a entrepreneur who was going to buy a business, and I was helping him go through the due diligence process on some businesses that he was considering. And one of the things that he was looking at was he was requesting the financials. And so we had some instances when we requested the financials and the seller said, okay, give me a little bit of time to get them together. We had other instances when we requested the financials and the seller said, okay, here you go. And they sent us, we asked for 3 years and they sent us 3 years of the financials. And when we got them, it was kind of like a mishmash of spreadsheets, tax returns, QuickBooks reports, just kind of like, every year was a little bit different. But then we had other companies and we said, can we see your financials? And they said, yeah, sure. And they sent us nice, clean PDFs of statements of cash flows, profit and loss statements, and balance sheets for each of the years we requested. And then when we continued to go deeper in the due diligence process and we took a look at tax returns, it was very, very easy to see how the tax returns related to the financial reports for the business. Now, you always have some explanation that you have to do whenever you're talking through the relationship between your tax filing and the financial statements. But generally speaking, if your books are pretty clean, you can have like a nice little one-page executive summary that explains the relationship between your taxes and your books. It's simple, it's easy to understand, and that's a symptom of healthy books. So clean up your books. That is something that is an incredibly effective way to enhance the value of your business. Now, you might say, well, I mean, how does it make me make any more money just by having my accounting in order? It doesn't necessarily help you generate more revenue, or it doesn't necessarily make you more profitable on the face of it. But one of the things you have to think about when you're looking to maximize the value of the business is not just making the business more profitable, but it's also de-risking a potential transfer of the business. And one good way to do that is to have very, thorough and easily understandable records, because you want your successor to be able to understand how the business operates, how it works, and to be able to see how money flows through it. And there's no better way to do that than with clean books. But I know I just said that the books themselves don't necessarily generate more revenue or more net income, more profit. But the reality is, if those systems are buttoned up, you are going to, number one, you're going to expend less energy, kind of doing like the fire drill to get ready for your taxes every year, or scrambling if the bank or your insurance company or a vendor or a regulatory agency asks for financial records, and it's a big bum rush to try to kind of get the records together really quickly because your books aren't super clean. That's stressful, and if you've ever been through that process before, you know how stressful it can be. That stress, the energy, the resources, the internal resources, the brain power that goes into managing that stress, if you redeploy that into more effective work in your business, that is for sure going to generate results. It's for sure going to help you be more profitable, generate more revenue. But also, when your books are cleaner, one of the things that you will find is that your general understanding of how your business operates and what's going on inside of it goes up. You've taken some of the guesswork, some of the mystery out of it by getting the books squared away. And the better that you know your business, the more effective you're going to be in running your business well. So those are some less tangible, but no less powerful reasons why it's smart to clean up your books. But at the very least, if you clean your books up, it will de-risk your transactions. So there you go. 3 simple things you can start working on right away. Number 1, think about how you can add recurring revenue. Number 2, ask yourself if you're really getting the most that you can out of your CRM. And then number 3, think honestly about whether or not your books are in a good, clean state where you'd be ready to show them to somebody today. So those are 3 simple things that you can do to improve the value of your business right away. And my strong recommendation would be to do it. There's no time like the present.